Good evening and welcome back to Be Rich. Today I want to talk about how private equity has evolved and how they have changed over the years. KKR's turn takeover of a consumer company led to a book called Barbarians at the Gate. It was an extraordinarily successful book. KKR started private equity based takeover in the year 1986. In these cases, those days it was known as LBOs, leveraged buyouts. What they did is when they acquired a company, the company's assets were pledged to raise money to pay back the private equity holders. So, way back in 1986, US based grocer Safeway was taken over by KKR using the leverage by BPO method. So, Carl Atkins, an employee of Safeway at that time, said that these things think and LBOs think. This is because the company was sold for $7 billion after turning it around. This is one of the most profitable deals that KKR has ever done. If KKR had done it, then why were the workers unhappy? Because the entire profits did not go to the workers of the company. More than 99% of the profits went to KKR's private equity owners, managers who managed it, and some top select management of Safeway who managed to turn around this company, thus ensuring profits for the private equity holders. The mainstream Safeway worker who was primarily responsible for handling clients and therefore the profits in Safeway got nothing out of it. And that is why people like Carl Atkins said that private equities things or leverage buyout things. Now things have changed nearly 40 years down the line. KKR just sold another company for 10 times the value it acquired. One of the better deals it has done now. The company is CHI Overhead Doors. CHI Overhead Doors has been sold for more than $7 billion, and therefore it is a new story. This time, the workers of Illinois, this Illinois based company, are extremely happy that there has been such a big sale. Why are the employees happy today and were unhappy that day? The reason is simple: private equity has evolved. In this case, what has happened is lot of stock options went to all people in the Illinois CHI industrial manufacturer. People even who were driving trucks and lorries for this company were given equity shares, which on options converted into shares. So, therefore, from the lowest employee to the highest management executive, all the employees of the company became stakeholders, and they were very clear if they did work well and the company turned around, they would make huge profits. And also, while the company was still in the process of turnaround and profits had started to come even before the sale of CHI overhead doors, what had happened is employees had got several $1,000s as dividends across spectrum. So people were getting a few $1,000s more than ordinary wages, which was the norm at industrial companies. When this company got listed, everybody seemed to have made money as they exited. There's a case of industrial workers on an average who have made more than $175,000. This is a big windfall. Imagine being an ordinary worker in an industry being allowed to exit by selling his shares to the investor for cash. And so most of these people have encashed and have made money. The KKR now says the average money made by each of these employees represents $175,000. This return more than 10 times the money the company and the employees invested. According to KKR, all 625 line workers, of including those who have driven trucks, as I said, received stock options over the years which they have exercised. Therefore, they have all got an average of $175,000, which I said. So this time, instead of reporters from Wall Street looking out for Pulster prices, talking about the loss for the worker, the cameras came out to Illinois to record happy feelings and happy news from the workers. They believe that they have received a windfall payment which they would have not got at any time. This has left a good taste in the mouth of the locals and also the for private equity investors. This has been noted not only at KKR but even in McKinsey and Apollo. So previously these companies including Apollo, KKR and McKinsey were not celebrated for their humanity, which means they were there to squeeze every last penny of profits and they did not care much about the worker who was actually turning around the company. Therefore, this means that employees of companies bought by private equity can also look forward to better things. So, KKR now insists employee share grants are not only about charity, which was always known. Employees who got these share grants became better engaged, worked for the company with more enthusiasm and more interest. This helps the private equity investors to turn around the company faster, add more value, and sell, and in the end, realize a better price. Therefore, one should not look at these things as charity but as an investment which will enhance the returns for private equity investors. So, at the end of the day, if the workers are more receptive to private equity investors and will help the new management milk every dollar of revenue possible, so hence to enhance EBITDA and net profits and get a higher valuation, which will also benefit the private equity owners. This is indeed a sea change in their attitude. Thank you for watching. Be rich. If you like the content, kindly subscribe to our channel and turn on the bell notification. If you do not turn on the bell notification, you will not be notified every time we put out a video. Once again, I thank you for your support to Be Rich. I have written two books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.